It's a milestone on the road to institutional adoption of Bitcoin. So I think it's important. Like, I don't think it drives Bitcoin to $5 million a coin overnight. You know, like some people hype it to be super, super important. I think it's important. It's one of probably 6 or 7 things that are milestones. The significance is big institutional investors want clarity, and they want to know that the asset is a legitimate asset. And so a spot ETF sends a message that it's a legitimate asset.
Michael Saylor, the former CEO and co-founder of MicroStrategy, has emerged as one of the most passionate and vocal champions of the world's leading cryptocurrency asset. His company boasts an impressive holding of 140,000 Bitcoin, making it the world's largest publicly traded Bitcoin holder. Saylor himself holds over 17,000 coins, acquired at just under $10,000 each. He predicts that 2023 will be the year we see Bitcoin explode. In a recent interview, Saylor discusses his thoughts on Bitcoin and the wider crypto ecosystem. He believes the Bitcoin rally is not merely a reflection of mainstream adoption. Instead, it is existing cryptocurrency investors reluctantly acknowledging the place of the leading crypto asset in the ecosystem. Despite recent price gains, Saylor believes that the greater rally from mainstream investors is yet to come. He is confident that when it happens, the leading crypto asset will easily surpass 10 times its current value. Saylor also stresses the importance of properly capturing and cleaning out the crypto and digital assets ecosystem before attempting to revolutionize the entire banking industry. For him, laying a solid foundation is crucial to ensure the long-term success of the crypto world. Let's get right into the latest interview with Michael Saylor. If you enjoy the content we do here on this channel, don't forget to hit the like button and subscribe.
The second thing is many of them have to buy securities. They can't buy commodities. So there are trillions and trillions of dollars that are in these institutions, pension funds and institutional investors, where they can buy securities, but they cannot buy commodities. And so they couldn't buy Bitcoin even if they wanted to buy the Bitcoin. It's either for charter reasons, like I raised $10 billion from a pension fund and I promised them I would only invest in securities that trade on national exchanges, or sometimes it's tax reasons. There are tax requirements. So now I start looking for a security, and if I want to buy Bitcoin, I want something that looks like the asset. You know, technically, one of the interesting things going on right now is if you look year to date at the performance of Bitcoin, it's up 81%. But you know, there's only one ETF. I mean, there's one major ETF I can use to buy it. That's BITO. Do you know what BITO's performance is year to date? 61% instead of 81%. It's lagging 20%. Okay. So, like, that's a big deal, right?
20%.
Yeah. Instead of 81%, you've got 61% year to date. So, they're achieving that coverage via trading on the CME using futures, but apparently you can't really construct.
You have a decay in the futures-based ETF.
There's a story there. The first year it tracked really well, but in the last year to date, it's off 20%. And if you look at year over year, over 12 months, Bitcoin's up 43%, BITO's up 31%. So it's lagging 12% in the last 12 months. So there's something there. So if you're an institutional investor, the spot ETF gives you a perfected way to do it as a security, like theoretically perfected. Look, if an ETF charges you 100 basis points a year, then in theory, that costs you 20% of your performance over the course of the duration of the asset. So it's not ideal, but a 25 to 50 basis point ETF would probably be reasonable. You certainly can't take a 10% a year hit, right, trying to do it with futures. And if you can't hold the asset, the issue with buying the asset is not just the tax issue or the charter issue. Technically, it's harder, but then you got to go through the custody issue. And so I think the spot ETF is an endorsement of the regulators as a legitimate asset, but also it provides an on-ramp where I could go and I could buy $10 million of it in 30 seconds by punching a button. And the alternative would be you could spend 30 months as an institutional investor and not be able to technically buy the same amount of exposure because of all the legal and accounting and governance factors that come into play. If they do register, I'm not sure they'll be called crypto anymore. I think they may be called digital securities. I think if you look at the guidance you're getting from the SEC and the writing on the wall, it's that the crypto industry is going to rationalize down to trading a lot fewer assets. I think that the crypto industry right now has a legitimate path to list assets without an issuer. Okay, and so if you think about the digital assets industry, I think digital assets mean digital currencies, digital commodities, digital securities, digital tokens, digital exchanges. Well, if there's a set of legislation in the US or some country that defined a digital currency, and I'm thinking stable coin here, right? Digital dollar. Or if it defined a digital security, some company, or foundation issued their own token. If it defined a digital token, like either a NFT token or maybe more likely a fungible token, like 100,000 Tom Brady superfan tokens, right? If you define those tokens, you could create a legitimate path to register them and trade them. So what's lacking right now is there is no taxonomy of those assets, and there is no path offered by the regulators. The SEC and the CFTC have not offered a definition or a path. So now you're waiting for Congress. You'll need a law, and the law will need to define the taxonomy. And if the law, by the way, I can see a world, like as a technologist, I can see a world where every security trades 24/7 digitally, like Apple, Google, Microsoft, everything. I can see a world where you have a light security token, which, is not a company, but it's like a crypto token, and it has lighter disclosures. There's a difference between the disclosures around General Electric, the conglomerate, and the disclosures around Solana, a network token, right? You would think I could see a world, but we're going to need a political process or maybe a political regime change for that to be put forth. I actually can see the benefit of every celebrity being able to issue their own token, Katy Perry token, Tom Brady token. They could own their own brand, etc. But the issue is
Saylor token.
Yeah, I don't think I'd be doing it. But the issue is you need an environment. You need a legitimate path to issue it.
Michael Saylor believes that while some investors were initially uninterested in Bitcoin and gravitated toward other cryptocurrencies, the recent tumultuous events of the past year have caused a massive influx of investors to return to the dominant crypto asset. He highlights Bitcoin's position as the reliable, trusted network that stands the test of time when other assets fail to provide stability. Saylor believes in the long-term potential of Bitcoin as an investment. Despite the current scrutiny of crypto by the SEC, he says those with crypto assets are likely to trade them for Bitcoin anyways, which is seen as the most trustworthy crypto asset and network. Saylor notes that Bitcoin has been moving up about 50% a year on average over the last 3 years. Despite some short-term losses, MicroStrategy continues to remain the largest holding of Bitcoin in the world. Saylor remains bullish on Bitcoin and echoes the sentiment of many high-profile investors, saying that the crash of the US dollar will lead to a rally in Bitcoin, the likes of which the world has never seen. What do you think about the latest interview with Michael Saylor? And when will we see the massive rally in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. We'll see you in the next video.